Hello everyone, myself Dr. Vinay Gandal from KMC College Khopoli. Today I am going to talk about conversion or sale of partnership firm into limited company. Dear students, in this video lecture we will learn about how partnership firm is converted into limited company and what is the accounting procedure when partnership firm are converted into limited company. We have to learn also calculation of purchase consideration and preparation of various ledger accounts in the books of old firm, as well as preparation of balance sheet of a company specifically in new format, that is vertical format, as per schedule 3rd of Companies Act 2013. And we have to consider a detailed provision with relation to conversion or sale of partnership firm into limited company. Okay, so first of all we have to learn about the concept of conversion. So dear students, conversion is a process where partnership firms are converted into limited company, or it is the process of sale of partnership firm to limited company. And in the case of conversion of partnership firm into limited company, the company or firm may get various benefits. So we have to learn reasons for conversion, or that is called as benefits which firms are getting on conversion of partnership firm into limited company. Okay, so normally a company is not affected by death or retirement of a member in the case of conversion of partnership firm. Secondly, in the case of conversion of partnership firm into limited company, the liability of shareholders is always limited. So for getting the benefit of limited liability, it is available only in the case of limited company. So normally firms are converted into limited company and get this benefit. Okay. Third benefit, that is transferability of shares. Normally once firms are converted into limited company, then in the case of limited company, the shares are easily transferable to others. Another benefit, that is there is no limit on maximum number of shareholders. So for getting more and more capital from the public, company can get or can issue maximum number of equity shares and raise maximum number of shareholders. Another benefit, that is called as benefit of large capital. Normally, a limited company can raise large capital from the public and carry on the business on a much larger scale. Okay, so in the case of conversion of partnership firm, the partnership firm can get many benefits. The second concept, that is called as a sales. Normally conversion is also called as sale of partnership firm to limited company. So when partnership firm are sold out to limited company, in that case there is a change in management. Even present partners may not become a director in a new company. So after conversion or sale of partnership firm into limited company, there may be a structural change in the structure of company, even change in management, and that may affect the system of management also. And third concept, that is called as a dissolution. So in the case of dissolution, in both the cases like conversion and sales, old firms are always dissolved and we have to follow the accounting procedure of dissolution when partnership firms are converted into limited company. And in the both the cases, firms firm is dissolved and most of the asset and liabilities are taken over by the limited company for an agreed price. And the entries in the books of old firms are same as in the case of dissolution of firm. In a normal dissolution, however, each item of assets is sold individually and each liability is paid individually. But in conversion or sale of partnership firm into limited company, normally all the assets and liabilities of the firm are taken over by the company for an agreed price, which is popularly known as purchase consideration. Okay. Now we have to learn about the concept of purchase consideration. Already we have been studied in last lecture about calculation of purchase consideration. So in the case of conversion also, there is a need to calculate purchase consideration. So first of all, we have to learn about the meaning of purchase consideration. Okay. As per accounting standard number 14, purchase consideration is the aggregate of shares and other securities issued and the payments made in the form of cash or other assets by the transferee company to the shareholders of the transferor company. In other words, purchase consideration may be defined as the amount which new company is going to pay to old firms for taking over the old firms as well as their assets and liabilities. Okay. So normally when we talk about conversion or sale of partnership firm into limited company, it is necessary for all of us to calculate or to consider the amount of purchase consideration which new company is going to pay to old firms. So the question is arise, what is actually purchase consideration and how it is calculated? So dear students, calculation of purchase consideration is the first step in conversion. So we have to understand the methods of calculation of purchase consideration. Okay. So the first method of calculation of purchase consideration is lump sum method. Sometimes the purchase consideration is given as a lump sum amount. For example, uh, there is one company that is ABC Limited, and the example is ABC firm is acquired by XYZ Limited for rupees 5 lakhs. Okay. In such a case, it is not necessary to actually calculate the purchase consideration because the purchase consideration actually given in the case that is 5 lakhs means ABC firm is acquired by XYZ Limited for rupees 5 lakhs, right? So amount of purchase consideration is rupees 5 lakhs and which XYZ Limited is going to paid to ABC Limited for acquiring their business. Okay. So lump sum method consists of lump sum amount of purchase consideration which is decided by old firms and new company. Okay. Second method of calculation of purchase consideration is payment method. In this method, the purchase consideration is equal to the total of all the payments made by the company to the partners. The payments may be in the form of cash, shares, debentures. Okay. And the shares or debentures may be issued at par or at a premium or at a discount. Even while calculating the purchase consideration in a net payment method, we should consider the issue price and not the face value of the shares. Okay. So dear students, In the case of payment method, we should consider actually the whatever payment mode given or decided by the companies on conversion of partnership firm. Okay. Third method of calculation of purchase consideration is net asset method. In this method, the purchase consideration is equal to the agreed value of asset taken over minus agreed value of the liabilities taken over. While calculating the purchase consideration under this method, we have to consider only the items or liabilities or asset which are taken over by company and ignore the items means assets and liabilities which not taken over by the companies. Okay, so as per net asset method, the calculation of purchase consideration is based on the formula like agreed value of asset taken over minus agreed value of liabilities taken over. Okay, so these are the three methods which we can use for the purpose of calculation of purchase consideration on conversion or sale of partnership firm into limited company. Okay, now we have to learn about various accounts to be prepared when partnership firms are converted into limited company. So dear students, in the books of old firm as well as new company, we have to prepare various ledger accounts. So normally in the books of old firms, a realization account is to be prepared to record various assets and liabilities transferred at book values. Okay, so whatever liabilities and assets old firms are having, that should be posted on debit side as well as credit side of the realization account. Secondly, we have to prepare partners capital account for recording balances, capital balances of partners and other relevant transactions on conversion of partnership firm. Then we have to also prepare cash and bank account to record whatever cash related and bank related transaction which is taken place during conversion of partnership firm. We have to prepare also new company's account in the books of old firm for recording the amount of purchase consideration payable and the relevant transactions. Okay. Also, we have to prepare balance sheet of new company in the books of new company or after conversion, specifically in new format that is called as a vertical format as per schedule 3rd of Companies Act 2013. So dear students, these are the various ledger accounts which are to be prepared while recording all the transactions on conversion or sale of partnership firm into limited company. Okay, then we have to understand various steps to be undertaken while recording accounting of conversion of partnership firm. So first of all, we have to prepare various ledger accounts in the books of old firms like realization account, partners capital account, new company account, cash or bank account or balance sheet. And we have to consider various steps. So first of all, we have to calculate the amount of purchase consideration. So whatever information given in the problem or available with us, we have to choose any one method of calculation of purchase consideration. Okay, so calculation of purchase consideration is the first step of recording transactions on conversion. We can use any one method from three methods available like lump sum method, net payment method and net asset method. Okay. Secondly, once various accounts to be prepared, we have to carry forward whatever balances the account is having. For example, in the case of partners capital, we have to transfer balance of capital account to the partner's capital account credit side. Then in third step, we have to transfer whatever assets and liabilities which our old firms are having at book values. So whatever assets old firm is having, that should all transfer to debit side of realization account at book values, as well as whatever liabilities which old firm is having, that should be transferred to credit side of realization account at a book values, means balance sheet values. Okay, once assets and liabilities are transferred, then we have to transfer accumulated profits and losses. So dear students, accumulated profits means the balance of profit and loss account, general reserve and surplus, which is normally shown on liability side of balance sheet, and that should all transfer to credit side of partner's capital account. And if firm is having any accumulated losses like debit balance of profit and loss account, discount on issue of shares and debentures, which is normally shown on asset side of balance sheet, that should be shown on debit side of partner's capital account. In fifth step, we have to record amount of purchase consideration due. So normally new company is going to paid or payable amount of purchase consideration to old firm, and that is to be recorded by passing the entry like new company account debit to realization account. So purchase consideration due is properly recorded in the books of account on conversion or sale of partnership firm. Once purchase consideration payment is due and if it is recorded, then we have to pay purchase consideration to the partners by various mode of payments as selected by the company. So whatever mode of payments are there, that should be recorded properly. Means purchase consideration is to be paid in the form of either cash, shares, debentures. So whatever mode of payment which has been decided by the companies, that should be recorded in the books of account on payment of purchase consideration. Okay. Then lastly, we have to record all the transaction which has been taken place with relation to conversion of partnership firm into limited companies. So dear students, these are the various steps to be considered while maintaining detailed accounting on conversion or sale of partnership firm into limited company. Okay. Then we have to learn about the balance sheet. So normally on conversion of partnership firm, on the date of conversion or after conversion, we need to prepare balance sheet of company as per vertical format and as per schedule 3rd of Companies Act 2013. Okay, so normally this is the simple format of balance sheet which is called as vertical balance sheet. So first of all, we have to consider the equity and liabilities, and it consists of number one, shareholders, which we can shown as a share capital, reserve and surplus, and money received against share warrant. Secondly, equity and liability consist of share application money pending allotment. So whatever information available with share application money pending allotment, that should be mentioned over here. And third, we have to record whatever non-current liabilities which company is having after conversion, and it consists of long-term borrowings like debentures, term loan, etc., deferred tax liabilities, other long-term liabilities, and long-term provisions. Means whatever long-term provision which is created by the company after conversion, that should be mentioned under the heading of long-term provisions. Okay. Then Fourth number, that is we have to record whatever current liabilities which company is having after conversion, and it consists of short term borrowings, trade payables. Trade payables consist of creditors, bills payable, etc. Other current liabilities and short term provisions. So then we can, after main showing all these liabilities, we have to total it. And secondly, we have to consider whatever assets new company is having after conversion, and that is to be recorded under each head. So first of all, we have to record non-current asset consisting of fixed assets, and the fixed assets are classified into four categories, like tangible assets, for example, land and building, plant and machinery, furniture, fixtures. Intangible assets like goodwill, patents, copyright, etc. It also consists of work in progress, intangible, whatever intangible assets under development should all recorded under the heading of fixed asset. Okay. Then we have to record whatever non-current investment if company is having after conversion, if there is any deferred tax asset, any long-term loans and advances, and other non-current asset that should be recorded properly. And secondly, we have to record whatever current assets company is having after conversion. It consists of current investment, inventories, trade receivables like debtors, bills receivable, account receivable, then cash and cash equivalent, short term loans and advances, and other current asset. Okay, so dear students, this is the simple chart of vertical balance sheet that we can use while preparing balance sheet of limited company after conversion. Okay, if you are having any questions with relation to conversion, you can ask or comment. Thank you.